All right, guys, another Sunday scan coming at you. Actually, it's a Monday night scan. We've got Monday off, Juneteenth, or observing Juneteenth, which is June 19th, which happens to fall on Sunday. I hope everybody had a great week last week. It was probably one of the slowest for me, and not because of action. It's just how I handled particular trades. So, obviously, REV, which I'll get into, was the standout of the week. But as far as other trades, they were there. Don't get me wrong, but I just mishandled them. I had some really, really good entries off the open. The trade happened, but that was it. The trade happened, and then it started to kind of rebound. It just flatlined the rest of the day. So it was one of those where it kind of keeps you in, but doesn't let you really leave the trade because it looks like it's about to fade, and then it starts to hold on again. So probably wasted hours and wasted or minimization of trades. And basically what I mean by that is getting on the right side of the trade, having that nice trade off the open within the first, say, 30 to 45 minutes. And then, I like to let trades work. And in some markets, it's great. You get that nice bell-to-bell type move, whether it's up or down, it doesn't really matter. And then there's other markets where the move happens within the first 15 to 30 minutes, and then that's it. And if you don't move on, then you might kind of be there watching the tape or paint dry the rest of the day, which was, sort of my process last week. So Rev, obviously, like I said, was the standout, which I will get into, but I just like to kind of focus on these of how I will, kind of work to improve on the week ahead. So I would say the biggest thing is we're still in that market where you're either on the right side of the trade and that trend is slowly working, or if it's a fast flush, you've got to really just move on and not look to let that trade work, because what I've noticed is they're getting kind of absorbed and come back. And for me anyway, it's a big waste of time. And for example, that was EDU and Neo and names like that, where you get that great trade, flushes out, you cover partial, you don't want to cover the whole thing because you're expecting maybe a bigger trade, and then it just is a slow and steady rally back. And I'm sure you guys are familiar with that, and then you look back and you're like, where did an hour or two or three go? So that was what I was up against. And ADN was another one where, ADN, I was really getting in there, watching the tape, waiting for that opportunity. The levels, insanity. I had told the room in the Traders Lounge, make sure you're recording this, make sure you go back and review. But just kind of seeing how it reacted at each level, 330, 355, 370, on the way up, and then being able to take advantage of that action late day, that was great. But it flushed out, it gave that 50-cent move, and considering how far it had gone, I don't want to cover it all. I want to let that trade work, and unfortunately, it would have been better just to cover it all, when it flushed at 50, 60 cents. Actually, I think it was almost like 80 cents. But then it rallied back into the close, which was great if it held on for the next day, but unfortunately it gapped down, and then it's just like, I just had a hard time sizing and taking that trade when, you're working with a 50-cent gap down, and then the potential is maybe, yes, another 50 cents like it did, but it's hard. It's hard to size in at the same capacity as the day before. So either way, nice opportunities this week, but I just chose to pick the ones that I was going to minimize rather than just ride out those nice, steady trades. So that's okay. One of the biggest things I think that people don't put enough attention to is that you don't need to trade. And I always was like that. And I'm not just saying this because I'm perfect. I'm not saying this because, I do it right every single time. I'm saying this because these are the things that I used to do. And I've really worked on verbalizing, to you guys and to myself, how to get better, how not to do that again. And, as you come into the summer, everybody always asks, is the summer month slow, this and that? And I really think that it has to do with what type of market we're in. Obviously, the summer has not been slow. the last few years. And I do think actually we might have another maybe breakout type move in the small caps again as everybody comes home for the summer and gets back into trading. Those that were maybe in, even high school, really, but high school, college, school, they're back home now, and maybe they get more aggressive, just like I did in college, where I was more aggressive in the summer because you're able to be there. You don't have to kind of either skip class or figure a way to trade in between your classes. You can actually just sit there and turn it into something like I did. And I always look forward to those summers to being able to be there, for the full day. So that, to me, maybe, given how many people have access to trading now, I do see small caps potentially getting a little crazier. But we'll see, considering the market. We've seen a lot of squeezes lately, which is great. But it just hasn't been those, this is the trade I want to take, high conviction, and, go for it. ADN was that for me, and I got the great entries, as you guys saw, but it was just, we ran out of time. Ran out of time for that trade to really unwind, to make it worth the amount of energy that I put into that. So, let's see. That was pretty much it as far as improvements and things like that. I know everybody wants to talk about Rev. A lot of people were asking me about that. One of the things is, after a big trade like that, everybody wants to know, hey, how did you do this? How did you do that? How could you tell? And, it's never the ones that don't work. Nobody cares about those. It's always the ones, people want to repeat the 2,000 to 4,000% move. And, look, I get it. Like, that'd be great to do that. But it's a very unique situation. And I'm very good at identifying the potentials. They're not always going to go. But when they do, this is what it's all about, right? So Rev was a very unique situation that I kind of compared to Hertz, HTZ. And the biggest reason I tweeted out about the volume. And so whenever you see a headline for bankruptcy, everybody's like, this is a no-brainer, fade, no-brainer, short, it's going to zero, it's bankrupt, yada, yada, yada. And there's certain situations, such as Rev, where it's trading 40,000, 80,000, 100,000, 20,000, 60,000. That's the average daily volume. And on a week, it might have traded 400,000 to 1 million shares for the full week, right? And, that would probably be on the higher end. All of a sudden, it trades 100 million shares because everybody, it's an easy zero, right? It's going to zero. It's going bankrupt. No brainer. Because people forget, people have short-term memory that these things don't just go right down. There's always that, maybe somebody takes some of their assets, maybe somebody does this, maybe somebody does that, and that uncertainty creates opportunity. And so what happened was, Rev is a super, super thin name. Trades 100 million shares. So, if you think about the normal trader, maybe they take 10 or 20,000 shares short, 50,000 shares short, or maybe even 100, depending on, what size trader you are, which is all fine with the 100 million share volume day. But if the volume tapers off, what was the volume last week and the week before, right? So if it stops going down, where is it going to go if everybody's holding 20, 50, 60, 100,000 shares short, right, on a thin float? They forget that it's a thin float. They forget that it was only trading $40,000 or 40,000 shares, rather, the prior days. So now all of a sudden your position alone is over the average daily volume of last week, of last, the days, whatever. And so that is what creates that unique opportunity, which I look to exploit. And that was one of the first times we've seen that since HTZ. And that's why you saw me. I posted that as an idea. I think it was on Wednesday. And, the end of the week was going to be interesting. And you saw that I took the 250 calls at 5 cents. And they traded as high as $2. I think they actually went a little bit higher. But either way, they went 2,000% was at $1.10. Yeah, 4,000% or so at $2. Insane. I made it to 130 on about 1/8 my size. But most of my sells were 90 cents to $1 range. And, you know, it was awesome. It was a great way to end the week with that. It made up for some of the slowness. But most importantly, I wanted to focus on that opportunity. So, you know, I did spell it out ahead of time. So I would not focus on like, how do I nail that? How do I do that? If you're going to try to focus and try to nail a 2,000% move, you're going to fail, you know, 99% of the time, right? It's a unique situation. So I would not focus on, you know, nailing the next one. But what I would focus on is, why did this one get on my radar? Why did I think this was a unique situation? And why, you know, did I prepare for it and find it worth the risk to potentially, you know, be wrong? And in this case, I'm buying 250 calls at 5 cents. So there's a good chance that you're going to lose either 100% or it's going to work out. And it just so happened to work out perfectly without a headache. And that was that. So I would encourage you guys to go back through the action, look at the daily chart, look at the volume leading into it, look how it started to hold trend. We wanted that gap down off the bankruptcy announcement, and then go into circuits. And we got exactly that. Shorts got on the wrong side, and the rest was history. We had another similar situation on CMRA. Not as crazy, but CMRA, I also tweeted on Wednesday, either Tuesday or Wednesday, that there was a special situation there. And we had the volume. It ramped up from like 120 to 4, then all the way back down to the mid-2s. Next day, it ramped up and then all the way back down. Then they caught it. Started to kind of grind, and they held trend. And like I said, as long as it's over 340s, we have that potential for the liquidity trap. And you guys saw that liquidity trap play out. This is what I'm talking about. This is identifying the ones that have the potential. And the ones that have the potential, if they do what they should do, you're going to have exceptional moves. If they don't, you stick to your risk. And it was worth the risk reward. It was a very high probability setup. And the ones that do go, they go nuts. And the ones that don't go, you've got your risk. And it's worth it. For me, anyway. So that was the thought process there. I would encourage you guys to go back and look through CMRA as well. I always talk about this stuff ahead of time so you can kind of see how it develops. And once again, when we're talking about liquidity traps, remember that squeeze itself is what you're anticipating. So if you're sitting there and you see it kind of squeezing out, getting heavy, squeezing out, getting heavy, you know, you might be increasing your risk by being greedy and not locking in and wanting more, because the liquidity trap is anticipating that squeeze to come in. And when that squeeze comes in, if it doesn't stay thin and keep going nuts, then you need to use that exit. Otherwise, the squeeze came and went and you're still holding the bag. That's my opinion. That's how I trade them. And that's exactly what I reminded everybody when CMRA was breaking out on Friday, if you participated. One of the other big things right now, if you're just trading to trade, and I know a lot of people are, you know, trying to get ahead. I know you're trying to get to the next level, trying to push forward, trying to grow your account, but don't underestimate not trading and waiting and focusing on stuff that you're comfortable with, you're confident on. I haven't been confident on a trade off open for quite some time. You know, confident as in A+ setup. This is the one. This is what I want to nail. And know that if I trade my process, it's worth the risk for that potential reward, which has a high probability of working out. And I haven't been able to check off those boxes lately, pre-market. And anybody that's in the room knows, you know, on the broadcast, I usually use that lately as recaps or going through these situations, these special situations, Rev ahead of time, CMRA ahead of time. the quiet type faders ahead of time. Going over those types of situations, what I look for instead of, all right, off open, this is what I'm looking to do, because they're just not there right now. And being able to know that and understand that and be prepared for that is half the battle. Because most people get in there and get in the chop, end up either going backwards or flat, waste a bunch of energy, and then they miss the entire move. So be aware of that. But it's all about knowing, this is the one, right? And if you can't say that this is the one for the day, then hands off. There's always going to be one. But it's going to be better to keep your energy and wait for the trade than try to force the trade and find it. And I personally, I used to, and I try not to, not perfect, but I try not to force the trades, find the trades. I prefer to let them come to me. I find I do a lot better. I find I make a much bigger spread. A lot of people get in there and sure, you can scalp, but I'd rather do less and think big picture. Sometimes it bites you in the butt. Right now, like I'm trying to let EDU work, and then it, goes from a huge trade for me to slowly starts to come back up, and, you waste time. But being aware of that, adapting, it's going to help. So that's that. Well, first off, we don't reply to any of the comments with, the WhatsApp scam thing. So that's all just a bot. So, just because it has our profile picture does not mean it's us. You can always click the link to see who it is. Just like when people ask me if I have Instagram or Facebook, and I've PM'd them. No, I haven't. We don't do that. You can always just look at the name on there and you'll see that it's not one of our official accounts. And my official accounts are pinned. It's my pinned tweet for about 1.5 years now, 2 years. So just know that we will never, do not manage anyone's capital. So if you're ever requested to send crypto or any of that junk, it's not us. T-shirt winner, Chris Shermer. And as you guys know, for Chris Shermer, who won the t-shirt, all you have to do, leave your key takeaway. And the timestamp, what the key takeaway was, and you're automatically entered. I try to hit everybody. I try to get everybody involved, and at some point, hopefully, you win. And that's that. So let's get right into scan for the week ahead. All right, guys. So for the second part of scan, as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're looking to be told what to buy or sell, you're obviously in the wrong place. If you're interested in learning, what makes a good trade, why it's on radar, how to improve, how to get better prepared, then you're in the right spot. So let's get right into it. Lately on scan, it's good to be familiar with the moves. It's good for bigger picture type opportunities. But as far as getting prepared for the day, like I said, I found myself just kind of being a little bit more hands-off and waiting to see what the market brings each day. There has not been a super high conviction setup like this is the one I want, high conviction, off open, from scan, all that kind of stuff. It's a different market right now, and that's fine. We're figuring it out. But, like I said, I have my own ways that I want to get a little bit better than I was, say, last week. By still seeing the market well, getting that big trade coming in, but I was overstaying, kind of minimizing what could have been there, or maybe re-adding and then, taking some back. There's definitely improvement or spots where I can get better. But this is what it's about. It's about verbalizing it and making it a thing rather than just kind of being like, I made or I lost, and that's that. Actually looking back, reviewing, understanding the why is going to help you become better. So first and foremost, we've got Neo. Neo has always been a great trader. It's been really respecting lines, higher levels. Each time, you can see it kind of comes back and retests the prior lines. Each day, we talked about the levels over here and right over here, the washout day, and it came back in and pretty much, retested those exact same levels. And if you guys remember on the FOMC day, I was covering into this range. And it looks like death. It looks like it's going to completely unwind. But it's better in this market to cover. And the difference between what I did last week and what I'd like to maybe do this week, the difference was, covering all or some, right? And if you covered all, you're good. You're a little frustrated if it goes lower. But the thing is in this market, there's great opportunity for sizing. NEO and EDU and ADN and all these other different names. But if you're not covering it all and it rallies back, it gets frustrating because that rounding error, it's huge. You lock in some of what was a huge gain, and then you give back some of what was a huge gain. And if you try to scale into it and it ends up staying stronger, you minimize the trade. And that's what was happening to me last week on a few of these names. So I just want to be aware of that this week. And if I get too aggressive and it starts to go sideways, then move on. Don't waste my day sitting in it for 2 or 3 hours when it's in a channel of 20 cents. So higher the better, reactive trade. Obviously, NEO is a trade that you would use the market. Look at Baba, Baidu, SPY. What's going on? Is China strong today? Is the market strong today? And that's going to give you a little bit of good information as far as what you should be doing with NEO. Rev, pretty phenomenal opportunity. You can clearly see that there's some support at 340s and a little bit of congestion also at the 4s. So if I was to, think about what I'd be looking for on Tuesday morning when we open up, 340s, if it stays heavy, I want to be cautious. That means it's probably the sentiment has shifted. There's a lot of weakness. And if it stays heavy there, then, the writing's on the wall. And if it stays over that level, starts to firm up and gets over that 4 level, then, hey, we've got another potential day of squeezing. So it'll be interesting to see how it pans out. But those are the 2 key levels that I'll be watching. And like I said, all week last week, there's a reason why I'm trading options. This could halt at any time and be delisted. There's a lot of risk. It's a bankrupt stock. So understand what you're trading. And if you're a new trader and you're going in on margin and something happens, you knew that was the risk. So that's on you. So be cautious. It worked out. It's a great trade. I personally took options. I had, minimal money at risk. And, I was able to make that trade with $5,000 or $10,000 at 0.05 cents. And versus having, a lot more in the market. So to me, I prefer the options on this one for the time being. And pretty soon I'll be probably just taking it off the radar. Next section is failed follow through. So I always have cold and drip, or I do have these ones on watch in the current market. The cold, KOLD, is of interest if Boyle rebounds. So if you look at the daily chart on Boyle, you can see that there's, it's under this chart, basically support. So if we're under that, cold's going to probably have a little bit of a premium and continue to skip up. But if we start to stabilize and firm up over that and rally, then I'm going to be looking to fade KOLD. Likewise with drip, same deal. Watch, you could also trade SCO, but I'll be watching it with oil and gas. If we start to firm up or rally, then this is going to start to come in fast. A lot of times when things start to first come in, these things catch up quick. It's like, oh boy, it's over. It's going to flush. And these things start to kind of pick up speed pretty quick. But at the moment that it's like, okay, we're going back to business as usual and steady grind up, these things sink. And you saw that, if you guys remember way back, FNGD, panic, slams down. Panic on the markets, and then, all the tech names that are in this and stuff rebounded, slams down. Same deal, slams down. So, same kind of concept. And then at some point it starts to get super, super choppy, and then you leave it alone. But that initial move that says, okay, Boyle has now based, we're going to rally, that'll send cold down for the full day. Same deal if USO starts to find a base. So those are on watch for that. AMC Daily Driver has been an okay trader. I haven't done it last couple times, last couple days. Maybe I did it on Wednesday or Thursday, just small, join the trend. But there's a trade there every single day. Focus on the range, focus on VWAP, focus on prior levels. But I always like to look at, kind of the congestion area, right? So for a situation like this, I don't want to have a set risk at 1250 or 1260s. I want it to kind of push through, exhaust out over those levels. Because think about, just like we talked about on ADN, the levels that we drew out, and you don't want to be shorting above that unless there's a parabolic move, which you saw. The 370 was the level not to short above unless it had the parabolic. You saw me getting short into the 441, I think. But the edge is either on the parabolic or back under those key levels. And if you think about it, the more that it trades above those key levels after it comes back, now you don't have all those shorts that were timid and not covering yet, but maybe we're gonna. They ended up, getting blown out. You've got breakout buyers. It comes back under. It stays heavy. Now all those people are no longer needing to cover. They're no longer there, and all the people that bought the breakout are now on the wrong side. So that's the concept of letting everybody else pay for the information and let it come back. And it's a different name after it comes back under those levels. So. That's how I'd be prepared for AMC. The last couple, again, scans are scans. There's some good information lately. Getting prepared, Rev and CMRA and some of these other ones. But for the most part, it's about getting prepared pre-market in this current market, and then sitting on your hands until there's an opportunity. And like I said, some of my best friends, some of the best traders that I know, they're just out enjoying life right now, and that's the right way to do it. You don't always need to trade. A lot of us feel like we need to, have to, but as you can see, some of these things are good to prepare for, but just don't force at all. Wait for the ones that you're the best at, and that's where you're really going to make the outlier moves, the outlier money. But CMRA. I would say like that 420 range, 415 range. If it's under that, be cautious. That means that there's probably, maybe the squeeze is kind of come in and run dry. We saw that on this AUVI, which finally came in, which sadly I missed on Friday. Really nice unwind there. But we had that really nice squeeze out trade. And the concept was the week open, and then at 3:30 started to consolidate for the squeeze. And seeing that squeeze out, and then the momentum shift came in, peaked out at that prior level, that's when I flipped from, I was selling the long, and then I ended up getting short. And the reason for that comes in, flushes out, retest, and fails. So basically, on CMRA, same kind of concept. You can see forming. So if we start to peak out and this starts to become a peak, I'd be using the same concept as AUVI. If it starts to base over that level, then you still might have that one last hurrah T+2 squeeze from that second day where we saw the trap that we were talking about in the room. Other than that, MREO, I have some of this long, nothing I'm too crazy excited about. We're right up into some resistance. I was thinking that maybe we gap over that and could go 172, then fade back off. We'll see. But there was some $4 buyout chat or saying that it's worth $4 in the event that they were pursued, I guess is the right term. But we'll see what happens. But anyway, a couple other notes. Top and BLTE, these ones continue to go. It's in that same kind of sector as IMTE, right? And I just want to say too, sometimes I get PMs and, everybody's like, oh, can you not mention a particular name? because they want it all to themselves and all that good stuff. I get that, but these types of moves encourage folks to figure it out, right? And anytime that there's a big opportunity, at some point things change, right? Before it was nice, nobody knew about it, and absolutely crushed, Jewel, JWEL, and HUDI, and IMT, the first, a whole bunch of them. You've seen them all, TIRX and AERC. And so what happens is people start to kind of figure things out, and it gets crowded and more crowded and more crowded. So you saw that on IMTE, and people complaining in this area because they think it's going to be just like the other one, every other one, and they don't know how to adapt. So the answer to them for their poor trade is, well, I'm going to blame the folks that are talking about it because it's crowded because of them. And that's why I'm losing. In their head, that's their key takeaway. That's why I'm losing, because somebody's talking about it, so it's crowded now. Meanwhile, they haven't adapted, right? And so for IMTE, sure, that it's a ticking time bomb. At some point it's going to go. So you have to adapt and just kind of let it run its course. And then when you see that volume come in, that's when you have the opportunity. And so you've seen this kind of march up on top and BLTE. We had it all on BLBX and CLEU. CLEU took like an extra week, right? Because everybody's afraid to miss the downside, and then they end up getting squeezed. But I can sense that. You can sense that too if you pay attention, but you just instead many times ignore it or want to blame, an outside source as to why you're getting squeezed. So the point here is that you need to adapt. And no matter what the situation is, just like delusion over the last 2-3 years was a great way to make money, right? Knowing which ones had an ATM, which ones needed to raise money, which ones had warrants. It still is, but you've had to adapt, right? There's no more of those full day unwinders in this current market. And if you still are expecting it to be the same every single time, you're getting chopped up, right? We talk about how they come in short, starts to go sideways, and then if it doesn't make new lows, what's going to happen, right? It's going to squeeze out everybody. So it's the same thing here with this top. It doesn't matter how many people are talking about it. What matters is the one thing we've always talked about, the volume, the liquidation day, and that's that. Otherwise, if you're trading it ahead of it, that's on you. That's you gambling, trying to find the top. That's you anticipating something that worked, maybe 10 out of the last 20, but your failure to understand how it currently works. So just think about that. Yes, I'm monitoring them. Yes, I'm ready for them. But if it's trading 40,000 shares, 80,000 shares, what are you doing? So be careful. And then last but not least, blue. Blue was a nice one on Friday. Nice little breakout, held view up and, kind of squeezed out. Anytime it starts to rip out, you can see that there was this prior high. So, for me, I always like to kind of sell into a breakout. Doesn't mean the whole thing, but, recognize that this level was kind of a resistance level. So if it starts to get heavier around there, you might not want to hold it the rest of the day if it's not over that level. So that's kind of how I adjust my risk, or at least prepare for it. But anyway, that's it. Like I said, it's a different market right now. There's still plenty of opportunity. I could have adapted a little bit better last week. Rev, was really the standout for me. Obviously, that was a 2,000 to 4,000% move. I think I made it a max of like 2,300 to 2,500% maybe, on the last, however percentage I had left, but not many, but, still cool to say. But if your focus is nailing the next one of those, you're going to lose the next 99 out of 100 of them. So just remember that it's a special situation. And there's a good chance that the next one is not going to work out as well because people will remember that. But once they forget, then we'll have another nice opportunity. So just like HTZ and all the rest. So anyway, I hope you guys have a good long weekend. It is Juneteenth today, so it's observed tomorrow, and I'm recording this on Sunday. But either way, we've got Tuesday through Friday, so it's a short week. Be aware of that. Be patient. You don't have to trade right off the open. Like I said, if you're trading right off the open, a lot of time those blinders go on. You miss all the, not easy trades, but easier trades. So just don't underestimate the benefit of staying patient. I think that's it, and we'll see you in the room on Tuesday.